Hello, good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here again, the Senior Market Analyst of OANDA Asia Pacific. So before we start our market insights for today will be Thursday. Very good morning, the 25th of January 2024. Let's take a look at the disclaimer slides first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposit. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the short-term technical outlook for today on the various cross assets, that means ranging from the major stock indices that affects gold as well as West Texas crude oil. Let's have a recap of what happened yesterday and at the start of today's early Asia session in terms of events and as well as the performance of these cross assets. So yesterday, let's start with the performance of the cross assets first, starting from the major US stock indices. So for the major US stock indices, continue their rally at the start of the session. So the Dow Jones, not the Dow Jones, pardon me, the S&P, the Nasdaq continue to reach intraday all-time high, and most importantly, one of the leading 7 mega cap stocks, Microsoft, actually continue to breach all-time high again, and almost approaching a market cap value of 3 trillion. Very soon is coming very close to the most valuable company in the world, which is Apple. Okay, but what's interesting over here, that towards the end of the US session over here, there's a bit of profit taking driven by the fact of this ongoing firming longer term US Treasury yield that is still above that previous resistance level, now turns into a pullback support at 4.06%, which is also above the 200-day moving average. So towards the end of the US session, it's kind of mixed across the major US stock indices. The S&P 500 managed to close marginally higher as plus 0.08%. The Nasdaq 100 definitely is a top performer again, driven by the mega cap stocks, which is one of these Microsoft, I mentioned earlier, and also this ongoing AI optimism where NVIDIA continue to scale new higher high as well. So that actually led the Nasdaq to be a top performer with a daily gain yesterday at positive 0.55%. So the Dow Jones and the Russell closed lower yesterday, negative 0.26% for the Dow Jones and the Russell negative 0.7%. So all in all, it's more like a profit-taking session yesterday in the major US stock indices. So let me share with you the heat map of the US stock indices of yesterday. Okay, so what we could see is that very clearly the mega cap stock is leading the fort, especially on the semiconductor sector, that is actually causing the Nasdaq 100 to be the top performer yesterday, whereas the rest of the other sector is neither here nor there. Okay, then the dollar actually yesterday negative 0.27%, led by the strength in the Japanese yen, which it came within our expectation, and it managed to slide slightly below 147 figure yesterday. Okay, later I'll touch more about the short-term technical outlook on the dollar yen. Very strong performance on the West Texas oil, which came within our expectation as well. Almost hit the range top that around the 74 level mark that I shared with you in a short-term technical outlook yesterday. So West Texas oil managed to cap yesterday gain at a positive gain of positive 1.17%. But however, gold continued to trade sideways, but still managed to hold above the key short-term support level at the $2015. But all in all, it managed to slide at negative 0.7%, led by the fact of this rising US 10-year Treasury yield. All right, so let's talk about the 10-year Treasury yield over here first, before I jump into the news event that took shape yesterday. Okay, so over here, let me share with you. Okay, yep. So yeah, this is the US 10-year Treasury yield. So what you could see over here, right? It could to inch upwards above the 4.06%. Previously was a key medium-term support, now turns into a pullback key medium-term resistance, now turns into a pullback support. Okay, pardon me. Let me put it in a different color. okay, and managed to hold above the 200-day moving average. So all in all, what I could see over here is this 10-year US Treasury is doing more like a counter trend rebound to retrace this first medium-term down leg that took shape from the high of 20th of October last year all the way down to the low of 28th of December. Okay, so with this push up over here, potentially, right, as long as it didn't surpass 4.5%, which is the 61.8% PBoC retracement over here, there shouldn't be any potential big scare in terms of liquidity tightening scenario. So that's why at this point in time, right, you see the US stock market and as well as the rest of the world still holding firm. All right, that means, i.e., their short to medium term uptrend trajectory still remains intact for now. Okay, that will be the intermarket correlation on the 10-year US Treasury yield against towards the benchmark stock indices. So now, one of the events I'll share with you all that took shape after the close of the Asia session yesterday was more stimulus finally coming up from China. So what we could see obviously that China yesterday, PBoC actually did a cut of 50 basis point, the reserve RRR. So what is RRR? So basically what they did over here is they right now free out the required reserve. You know, in banking system, right, banks required to have a certain percentage of their deposit being kept with the central bank. So what it means that over here is that they reduce the amount of deposit that is required to keep within the central bank, the bank's reserve. So this actually free out more liquidity into the banking system in China. So what they did over here is that they lowered by 50 basis point, which is 0.5 percentage point, and this cut is the most in terms of magnitude in the last 2 years. So that's why they actually created a positive feedback loop in the futures market yesterday on the Hang Seng futures, because this was announced at the close of the Asia session at around 4:15 p.m. somewhere around that time, where the Hong Kong market is about to close. But however, you know that the Hang Seng futures traded after the Hong Kong normal session, and they managed to actually added by close to about 0.8% and almost go back to the 16,100 level on the Hang Seng index. So why 16,100 is important? Later I'll share with you all during the technical outlook chart again. Okay, but what most importantly over here is it unleashed a bit of animal spirits into the market. Then now most of you will ask, is this sustainable or not? Can this lead to a more pronounced rally on the Hang Seng index? That means is the Hang Seng index now forming a major bottom? The answer I tell you right now, frankly, there is no clear element yet from a technical perspective, and also from a fundamental perspective. Yes, even though the China's government PBoC now started to boost this what you call it liquidity injection into the China banking system, but do not forget over here is that have they addressed the crux of the problem, which is a deflationary risk scenario right now, driven by a very weak consumer sentiment and weak business sentiment? The answer honestly is no. Why? Because if you were to reduce because RRR, you boost liquidity, there must be a demand for this additional loan. And demand for additional loan to the real economy only comes when consumer sentiment and business sentiment starts to take up. But unfortunately, there is no signs of it turning around the corner at this juncture. The only way China will need to endorse more forceful fiscal stimulus to address this ongoing weak sentiment that is driving this deflationary risk spiral in China. That means more direct subsidies that boost consumer spending, that boost business spending, okay, or even perhaps some kind of food voucher to actually we call it for those massive youth unemployment. All right, so I leave it there from here because that should be the surface that you have to understand. But net overall, in the short, it could still be a potential what I call short-term counter-trend rebound that is still in the works on the China stock market, which eventually spill over to the Hang Seng index. Okay, another news I want to share with you all will be over here in the US economy as well as the Eurozone economy. So yesterday, right, like I mentioned, there was a release of the flash PMI data for January across the globe. So what we could see over here is the start from the Eurozone first. Okay, over the Eurozone over here is that there's actually an uptick in the manufacturing we call it a sector in Eurozone, but it's still in contractionary mode. Why? Because it's still below 50. But however, the deceleration on the downside starts to slow down from 44.4 in December. It actually reduced it, the pace of contraction reduced to 46.6, and also surpassed expectation of 44.8. And very similar, services was lackluster, so it was a mix there. So 48.4, slightly below 48.8 in December. So in UK as well, UK managed to actually surpass the expectation, both on the manufacturing side, 47.3, 46.7 expectation, and also above December 46.2. Similar for the services as well, 53.8, above, slightly above expectation, 53.2, and above December figure of 53.4. Okay, then what's important over here will be US, given that it's the #1 economy in the world. So US, the manufacturing sector managed to grow back to a slight growth trajectory. Okay, so what's important here, previously it was contracting 47.9. If you look at the pace of the manufacturing sector right now, there's actually a turn around. All right, over here, so this is it jumped to 50.3, and the reading was the highest since October 2022. And you look at the 5-year trend, there seems to be a formation of a series of higher low. And yesterday, it was the first time since October 22 it managed to tick up above 50 expansionary. So what it means that over here, right, the US manufacturing previous deceleration has started to form a turnaround, which is positive for the US economy, and potentially in the medium term perspective, it could be so positive globally, and as well as the major US stock indices from a medium term perspective of for a longer term perspective. Then what's most important will be the services sector, which is most primarily the US economy is driven on. I mean, close to about, I think, 2/3 of the US economy is driven by services activity. So on the services PMI, it managed to continue to expand at what you call it, at a tepid pace on the upside, 52.9 above 51 expectation, and also above 51.4. All right, that was printed in December last year. So if you look at the trend on the services PMI, it's on a healthy clip on the upside. All right, it's acceleration. Okay, and if you look at the trend on the 5-year basis, okay, you see a nice we call it a U-shaped curve over here, the U-shaped curve. Okay, so with that over here is that net right, we start to see a signs that we call it services activity it starts to be on a firm footing. Manufacturing starts to be a bit on the uptick right now in US, and as well as Eurozone itself also seems to be turning around the corner, even though it's still in a deceleration mode below 50. But the pace of deceleration will start to slow down. So overall, it seems to us that the global economy is now hemming on the so-called a stable footing. Definitely the big risk will be geopolitical tension in the Middle East and the Red Sea, so that we could actually continue to monitor going forward. All right, so one more news before we jump into our short-term technical is Tesla. So Tesla over here, right, it actually the earnings of Tesla came in below expectation, and also the stocks also failed to actually we call it give because the stock actually fell 6% in the after hours, because the earnings announcement came after the close of the US session, and you all know that for US stock market that is after trading hours as well. So that's why Tesla itself, with the fall of Tesla 6%, we do see a bit of profit taking today in the Asia session on the major US stock indices, especially on the Nasdaq 100, where Tesla has a significant weightage on them. I think they are in the top 6. Okay. Component stock in Nasdaq 100. So where did they fall by 6%? Based on this, because of they give a kind of a negative profitability start to decline, and as well as they didn't actually what you call it, give a forward guidance to forecast what's their what will be the demand for Tesla EV vehicles in the next few quarters. So that actually causes a negative feedback loop on Tesla stocks share price in the after hours trading session. All right, so with that, right, now let's just jump straight to the short-term technical outlook and share with you all. Okay, so let's start with the major indices first. All right, so let me expand my screen so that you guys could actually see it better. Okay, so let's start with the Asia indices, which is the Hong Kong 33, which is the Hang Seng Index. Okay, so the Hong Kong 33 index over here is that yesterday it managed to actually hit the 16,100 level, and it start to pull back in today's Asia session. And right now it's starting to shape that V-shaped minor recovery again. And what's interesting over here is that yesterday push up that formed that higher high. Okay, that formed that higher high over here. The RSI, yes, even though it went into the overbought level, but once hitting the overbought level, it didn't shape a bearish divergence. That means there's no lower high. Similar movement with the price action. So indicating to us that yes, this exit from the overbought, right, is just a potential. We call it a retracement to retrace off its previous strong momentum, rather than the start of a minor bearish reversal, because there's no bearish divergence that's been flashed out. So that reduce the risk of a minor bearish reversal. So given the positive showing that is being seen on the hourly RSI in relation to the price action, we will maintain our bullish bias, short-term bullish bias, to actually potentially look out for further counter trend rebound in the Hong Kong 33 index, using a tightened key short-term pivotal support for today at 15,530, which is also the pullback support of this formerly minor descending trend line resistance, now turns into a pullback support. All right, so as long as 15,530 short-term pivotal support holds for now, we will maintain that short-term bullish bias for that potential extension of this counter trend rebound towards the next resistance at 16,525. So what's 16,525 is in fact the minor congestion area of 3rd of Jan to 6th of Jan, and also confluencing with the downward sloping 50-day moving average that's still acting as a resistance right now. Okay, so why this 16,100 is so important? Because if you look at the longer term chart on the Hang Seng index, so this is the monthly chart, it's a very long term chart. So right now it's trying to fighting to this is a monthly. So as long as it didn't actually have a monthly close below this 16,100, why this 16,100 is so important? Because it's a long term descending trend line, ascending trend line support level, all the way down from the low of August 1998 during the onset of the Asia financial crisis, that managed to support the index on April 2003, pardon me, October 2008, which is the GFC, the Great Financial Crisis, and most recently during December, November 2022. So this was also during the onslaught of that continuation of that clampdown in China big tech stock, and also the extension of China, we call it COVID-19 stringent curbs on the various major Chinese cities. All right, so I'll be watching very closely on the 16,100 level. All right. So, but meanwhile, we still maintain that short-term bullish outlook as long as 15,530 short-term pivotal support holds for now on the Hong Kong 33. Now moving on to Japan. So Japan over here, right, potentially right now we could potentially, so now I'm a bit hesitant because we start to see a bit of what I call bearish movement in terms of the price action. So what we could see over here is that the price action now start to shape lower higher, this high, lower than this high, lower than this high, lower high, and also starts to shape this bearish reaction of this former minor ascending channel support, now turns into a pullback resistance where that lower high is being formed, as you all could see from here and here. Okay, so with that, right, potentially right now, right, we could start to see a minor corrective decline to retrace this very steep previous 3 weeks of up move towards the 37,000 psychological level. So all in all, what we could see over here is that it's in the midst of a retracement of at least down to this 38.2% PBoC retracement. So with that, right, I'll be flipping to a short-term bearish bias on the Japan 225 below 36,530. That was the last lower high over here, 36,530. Potentially could see a slide to test the minor swing low area of 17th of Jan, which correspond to the 30.2% PBoC retracement as well of this recent 3 week of strong up move, which is confluencing at the support level at 35,350. All right, so this level also confluence with the rising 20-day moving average as well. So it's more like a mean reversion counter trend decline within a medium-term uptrend and a short-term uptrend that is still intact on the Japan 225. All right, so this is a short-term bearish bias. All right, for a mean reversion corrective decline, our strategy can be in a short and medium-term uptrend that is still intact as long as 36,530 short-term pivotal resistance holds for today. Okay, only an hourly close above 36,530 will invalidate this mean reversion corrective decline to see the continuation of this impulsive up move towards 37,000, followed by the next resistance at 37,480. All right. What is the 7480? This is actually conversing with this light blue line over here. So what this light blue line is a PBoC extension level, as well as the major ascending channel top that I draw from the low of January 2023. Okay, that's close to a year worth of ascending channel. Okay, now European currency. So European indices, pardon me. So I get too excited to jump the gun to the FX market. So European index, German. So for the German 30, right, it actually rallied as expected and hit the top of the range at 16,970. So why this is the top of the range? Because it's a range resistance since its all-time high at 14th of December. All right, over here, tested one time, tested two times, tested three times. But what's important over here is that yes, it has a very steep rally over here. But at this steep rally, right, the RSI over here, yes, it hit the overbought, and right now it's trying to already exit the overbought, which is intended to us that there could be a potential minor pullback, but not a minor bearish reversal. Why? Because the RSI didn't shape a bearish divergence as well. It started to show higher high in line with the price action of higher high. So with that, right, yes, there could be a pullback taking shape over here as the RSI is trying to work out its overbought condition. Any potential pullback, as long as you manage to held above this Titan key short-term pivotal support I have for today, 16,710. We also confluence with the rise, the 20-day moving average as well, slightly below it. I will still maintain that short-term bullish outlook. First resistance 16,970, a breakout above it potentially takes up to the next resistance at 17,130 next. All right. So if we could see over here, right, it could be the start of a new ascending channel, minor ascending channel at this point in time. Okay, so it hit at the top of the minor ascending channel for today, for yesterday, and this where it potentially it could slide down to the lower boundary of the ascending channel, then thereafter slowly churn up towards 17,130, which in a couple of days is also confluencing the top of the minor ascending channel that is now unfolding since the low of 17th of Jan. All right, so net overall, as I will use a Titan key short-term pivotal support for today for the German 30. As long as any pullback managed to hold above this support level, 16,110, maintain that short-term bullish bias. Okay. However, only an hourly close below 16,710, a bit of time twisting. Hourly close below 16,710, then it will negate this bullish tone to kickstart another round of choppy minor corrective decline towards the next support level at 16,515, which correspond also with the rising 50-day moving average. Okay, so all in all, right, even though the support levels start to break down, the medium-term uptrend hasn't been damaged yet. Why? Because it's still holding above the 50-day moving average, which is now acting as a support at 16,515. Okay, now US indices. So the Dow Jones Industrial Average managed to retest 38,100 again, but thereafter it did a pullback, but the pullback managed to hold right at the support level that we highlighted yesterday, 37,800, which is this all important key, formerly all-time high range resistance, now turns into a pullback support. So no change as long as 37,800 short-term pivotal support holds on the US Wall Street 30, which is the Dow Jones Industrial Average. We will still maintain that short-term bullish outlook. First resistance 38,100 for sure. Above it, sees the next intermediate resistance coming in at 38,400. However, if we start to see an hourly close below 37,800, then potentially we could see an extension of this minor corrective decline starts to unfold within its short and medium term uptrend towards the next potential, to expose the next support level at 37,550, which is corresponding to very closely to the 20-day moving average as well. Nasdaq 100. So over here, Nasdaq 100 continue to shape higher high, and right now it almost came close to the resistance that we had yesterday, 17,750, printed a high of 17,685 before it shaped that pullback towards 17,470. All right. Okay, overall, right, net, we will still maintain that short-term bullish outlook, but I don't want to put it so tight at 17,470. So I'm still maintaining it at a Tuesday swing low area, which is also the median line of this minor ascending channel that is in place that I draw since the low of November last year. Okay, that's the median line of this minor ascending channel. So net, as long as any pullback managed to hold above 17,290, I will still maintain that short-term bullish outlook on the Nasdaq 100. First resistance to watch for sure will be still at 17,750. Above it sees the next intermediate resistance coming in at 18,000, which is psychological level / 18,030, which also correspond to a PBoC extension level at 2 times, and as well as a nested PBoC extension level as well from the low of 70th of Jan, project it to the last swing high, and to Tuesday swing low is at 0.764. Okay, this is called the nested extension PBoC level. Only an hourly close below 17,290 will negate this bullish tone to see or to kickstart a minor corrective decline back towards the 20-day moving average. Again, we in a short and medium term uptrend that is still intact. We should expose the next support level at 16,910. All right, so net, right, I've covered the major stock indices. So overall, all of them are still bullish, holding above their respective short-term pivotal support level that I highlighted to you all. The only one that is that I flipped to a bearish bias is on the Japan 225, but this bearish bias is not the start of a medium-term downtrend. Okay, it's more like a minor mean reversion corrective decline within a short and medium-term uptrend that is still intact on the Japan 225. All right, so that's sum up for the major stock indices. Let us immediately jump to the major FX pairs. All right, so on the major FX pairs, right, the dollar has still weakened yesterday. Let's start with the euro dollar. So euro dollar, right, same thing, no change, right? It's going to churn within a range over here. So what's interesting about the euro dollar? Yesterday it pierced up, right, and hit the resistance at 1.0965 before coming back down again. All right, so that important, it actually hit our so-called resistance level before pulling back. So for sure, right, we will still be using this 1.0840, 1.0820 as my short-term pivotal support for today. Still maintain that short-term bullish outlook on the euro dollar. This is a 1 hour chart. So the resistance to watch will be at 1.0965. Then only a clearance above 1.0965 important. Why? Because it confluences with the 20 and the very closely the 50-day moving average that is acting as a resistance as well around this 1.0965. So a clearance above this 1.0965, right, potentially could start to see a kickstart a new medium-term uptrend scenario. In first step, the first resistance to watch will be at the 110 figure level. All right, previously was resistance on 6th of Jan and 11th of January. Okay, only an hourly close below 1.0820 was kickstart a minor corrective decline towards 1.08, followed by 1.075. Okay, then on the sterling dollar, no change, right? I continue to churn within the symmetrical triangle range configuration that is in place since 28th of December. So this is a symmetrical triangle range. It's a triangle, like a triangle range configuration. So yesterday it hit the upper limit of the range, tested twice within our expectation, and it came down, pullback. Okay, so no change, right? Still going to hover within this triangle like range configuration. So we will still maintain that short-term neutrality sideways stance on the sterling dollar between 127.60, pardon me. Upper limit, lower limit will be at 126.40, which is also corresponding with the 50-day moving average. All right. Then moving on next with the Asia Pac currency, let's start with the dollar yen. So dollar yen yesterday came down, almost hit 46.25. And what's interesting over here is now it has really broken below the minor ascending channel support that I drew from the low of 28th of December, and it acted as a pullback resistance yesterday in today early Asia session. Okay, at 148 figure level, 148 figure level. So I don't want to use 148 figure level so tight as my short-term pivotal resistance for today. I'll push it up to the previous minus, we call it a minor top at 19th of Jan, rejected exposed POJ announcement 149.80. So I tidy up the short-term pivotal resistance for today. Previously was around 149.30. I tidy it down slightly lower, 149.80. So as long as 149.80 short-term pivotal resistance holds on the dollar yen, is the 1 hour chart, we will still maintain that short-term bearish bias on the dollar yen, with the next support level to watch will be at 146.25, which correspond to the 50-day and the 200-day, not 50, the 50-day and the 20-day moving average coming close to it as well. Okay. Only an hourly close above 149.80 potentially could see the invalidation of this short-term bearish bias on the dollar yen to see a squeeze up to test the next resistance at 150.20, 150.70. All right, so net still maintain that short-term bearish outlook on the dollar yen. Aussie dollar continue to churn within the support level at 6570 slash 6570 slash 6550. And what's interesting over here is that the hourly RSI going to shape higher low again, okay, supported by this rising ascending trend line support level. So indicating to us that there's still some signs of short-term bullish momentum coming back into the Aussie dollar within this range configuration. So yesterday it tested the top of the resistance that I shared with you at 66.15 level before coming back down. So no change, still maintaining that bullish bias above 65.50. First resistance to watch will be at 66.15 level. Why is it important? Because it's also tested 3 times. Yesterday it tested before it pulled back, and also corresponding to the minor descending trend line that is in place since 28th of December. Okay, only an hourly close above this 615 level potentially sees the next intermediate resistance coming in at 6650 level, confluencing with 3 important elements: the minor congestion area of 11th of Jan, 15th of Jan, and as well conversing with the 50-day and the 20-day moving average as well. Only an hourly close below 65.50 potentially exposes another slide to see a retest of that medium-term range support level at 65.20. Okay, so net overall, right, we will still maintain that we call it a short-term dollar weakness potential outlook. Gold, so spot gold going to churn within a range, so now still fighting to hold above that 2015 short-term pivotal support level that we highlighted. So still using this 2015 pivotal support level, the first resistance level to watch, right, will be this swing high area that was tested 3 times, okay, since last Friday at 2040. Okay, so it will be 2040 slash 2045. Okay, so that's the first resistance level to watch. So still no change, still maintain that short-term bullish outlook in a range configuration for spot gold XAU slash USD, as long as it managed to hold above the 2015. But however, if you start to see an hourly breakdown below 2015, then we could see another round of a choppy slide to retest the psychological 2000 level. In first step, a breakdown below 2000 exposes the next support at 1990. Then what we have for WTI crude, which was pretty much strong due to the rising geopolitical tension in the Red Sea and the Middle East region. We see it finally clearing above the 50-day moving average, and also breaking up above this descending trend line resistance that it was in place since the high of 28th of September. Okay, so all in all, right, it seems to us that oil price is now getting more resilient and getting more firmer on the upside, but still holding below the 200-day moving average, and as well as still below the minor swing high of 27th of December. But given the fact that elements are now getting more positive, I'll be much more we call it confident to tighten the key short-term pivotal support right now above the 50-day moving right at the 50-day moving average that is now acting as a support level since this Tuesday, after the bounce for it and shape higher high. So 73.55 with a tightened key short-term pivotal support at 73.55. First resistance to watch 76.05, breakout above it, potentially sees the next intermediate resistance coming in at the psychological 78 level, which is also confluencing with the 200-day moving average. Only an hourly close below 73.55 level, then we will see another round of choppy movement within a range configuration to retest the 20-day moving average, now acting as a support at 72.60. So net still maintain that short-term bullish bias on West Texas oil, now with a tightened key short-term pivotal support at 73.55. Okay, so that sums up for today's we call it short-term technical outlook. So let us quickly go to the calendar. What are the key events to look out for today? So today's key event, right, will be primarily focusing on ECB. So European Central Bank decision will be out later at 9:15 p.m. Singapore time. Then thereafter, you will have the press conference at 9:45 p.m. So for sure, right, ECB President Lagarde, as she mentioned during Davos meeting, yeah, very likely they will maintain their interest rate for this time around at 4.5%. But we shall see during the press conference what's her signal like, because during the Davos, on the sideline of Davos meeting, means the World Economic Forum meeting last week, she did mention that ECB is pretty much favorable to kickstart its first interest rate cut during the summer months this year. That means we're talking about somewhere around June, July, August. So we should see later more evidence of such guidance during her press conference later. Then after that, you also have advanced Q4 GDP last year. GDP last year for US at 9:30 p.m. Singapore time. Okay, so that will be, yeah, so that will be all. So that will be the key data to look out for today. So with that, right, I'll end today's daily dose session, and have a great day ahead, and we shall speak again tomorrow. Thank you.